they only respect strength. They really do. They only respect.
Alright guys, as some of you may know, I'm a huge Dragon Ball fan. I've been searching all over Netflix to watch Dragon Ball episodes, but unfortunately Netflix here just doesn't have them. But you know which version of Netflix does? Netflix Japan. Some of you might be wondering, how on earth am I accessing Netflix Japan, right? Well, that's where NordVPN comes in. NordVPN is one of the top VPN services out there. It allows you to mask your location and browse securely, which is perfect for protecting your privacy. Plus, NordVPN can basically change your location to anywhere in the world with just a few clicks. So it's just as easy as that. That's how I'm able to access Netflix Japan and binge all of the Dragon Ball episodes that I can fathom. It's not just about watching international shows, however. NordVPN adds an extra layer of security basically as you're browsing, so your personal information stays safe and your online activity remains private. If you want to unlock more content and protect your privacy online, head over to nordvpn.com/Harariboy to get over 70% off a 2-year subscription plus 3 months free. And if you don't like it, you can cancel within 30 days and get a money back guarantee. It is worth the peace of mind and extra content you'll have access to. Thank you.
What's going on, everybody? Welcome to another exciting episode of the Harariboy Podcast. Today we got 3 topics to go over today, and a lot of drama, a lot of turmoil going on in the economic realm, so we'll definitely touch on that. The first topic we'll touch on, I want to go over something that went on the Big Money Show. I feel like it was very informative, their takes and things of that nature, so we'll take a look at that. Also, I want to touch on how much your house payment should be. I'm sure some people might have an idea, but I'll give you a somewhat official response on what that should be. That has been proven time and time again to help you build wealth and become successful. And then lastly, we'll talk about some of the China drama and the stock market falling because of it. So without further ado, let's go ahead and dive right in. All right, so for the first topic here, I want to talk about the Big Money Show. It's a show that sometimes features people like Kevin O'Leary on it. And it's on Fox Business. It's a really good show. I enjoy it, and I encourage you guys to check it out. But in here, they do go over a couple of economic indicators. Whether or not how the stock market is doing, things of that nature, and how China is affecting that. But yeah, Kevin O'Leary says some interesting stuff, and the rest of the panel. So let's go ahead and without further ado, let's go ahead and take a look here and see what exactly is going on.
Stocks mixed. We will take that after Monday's relief rally. That came when President Trump softened his tone, saying China had a bad moment and promising it will be all fine. The next market mover may be Jerome Powell, who's set to speak publicly today for the first time since September's quarter-point interest rate cut. We will have all the breaking news from that as soon as the Fed chief takes the podium in Philadelphia. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-host, Kevin O'Leary, Brian Berenberg, Jackie DeAngelis, and Making Money host, Charles Payne. We've only got him for an hour, but we will make the best of it. The most of Mr. Payne. JP Morgan, Citi, Goldman Sachs, and Wells Fargo kicking off earnings season this Tuesday. Investors are flying blind this week when it comes to key, say, economic reports like consumer prices, retail sales, all of that on hold during the government shutdown. And now, this is not new, but still in the forefront of people's minds, bubble fears about artificial intelligence are back with the biggest names in technology pouring billions of dollars into each other, fueling talks about a self-made boom that could turn bust. That's not a period, that's a question mark. What are you watching, Charles? What are your biggest concerns here, if any?
I don't have a lot of concerns, really. I'm really completely excited about the time we're living in, the opportunities that we have, And I think the biggest problem I have is with people looking at this as the market. I did a back of the envelope last night, and I figured I've been to the supermarket 107 times in my life. Okay? I've never gone in the supermarket and bought every single thing in there. In fact, I've never even gone to the apple bin and just picked up any apples. I have always looked for the ones that I thought were the best. This market, if you're selective, can change your life. It already is changing lives. It already is changing lives. So the stuff that's happening, and what's ironic about it, this is an America First rally, right? The rare earth stuff, the quantum stuff, the artificial intelligence stuff, industrials that are working because of reshoring and onshoring. This is absolutely amazing. And I think because of the saber rattling and what we saw going from Thursday to now, more people are coming on board with the notion that, hey, we should be investing, in these rare earth companies. We should be. This is the same as the highway program. This is the same as turning plowshares into tanks. This is that kind of moment right now, and it should be all hands on deck, and the market's reflecting that.
Can I ask you a question about, I love the way you talked. I can't believe you've been to the market only 107 times in your life, though.
Supermarket.
You've been to the supermarket more than 107 times.
I've been to bodegas, but I'm just saying like a big supermarket, you know what I mean? Like where there's a whole bunch of stuff.
So here's my question for you. You're looking through the apples. Every apple in the bin right now says we've got a major AI play with us, okay? And a lot of them don't have revenue yet, right? So how are you looking beneath the hood to find those apples, that don't have the worms underneath, that don't have the spots? What do you do to do that?
Well, the great thing is there's so much information out there, right? I mean, that's the most beautiful thing out there. There's company reports, there's industry reports, almost every single way. There's industry periodicals. There's so many ways if you just want to take the time, maybe skip a round of golf. Maybe instead of investing into a fantasy football league, invest into doing this sort of a research. A big name that's up, right? Novetis, right? NVTS. Stock popped in May. They had some news making a power system for NVIDIA. It popped again in June, popped again in July. And all the articles like, is it too late? Is it too high? It's ahead of itself. Well, it's up again today, right? And so I think there's so much focus on, did I miss it? What was it? It's going down, tick, 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 tick. When we watched Tom Brady win his 4th Super Bowl, I don't know if any sports network said, man, one day his arm is going to get tired. One day he's going to retire. One day he's going to be slow. No, it was on the majesty of the moment. Yes. The good thing about this, though, the majesty of this moment.
You got Jackie on Tom Brady.
The majesty of this moment is that the people watching the show can participate. This is their Super Bowl if they go out there and go get it.
I agree. I think if you're sitting out of this market because you're scared about what could happen, we could what if all day, right? And it could be 2-3 years, more than that, before, if there is a bubble, the bubble bursts. What we have learned over time is that if there is a problem in the market at some point and there is a little bubblicious activity there and there's a sell-off, you want to stay in it. That was one of the biggest mistakes I made in 2008, being so scared on the way down, liquidating. Wrong thing to do. You hold it and you wait for it to come back, because it does come back, and then it comes back and with some more.
Yeah, and then, by the way, when it was down there, it created some fresh opportunities.
Well, the down hadn't started yet, and that's my concern. And Kevin, you can jump in here, you too, Brian, because I'm not taking over the floor.
The wall of worry on AI, the so-called self-dealing between the behemoths buying and selling stuff to each other, is being sort of, the analogy is the early 90s on the internet bubble with the pets.com and all that stuff. But the big difference is I can't find a sector of the economy that isn't using AI now. Every single sector, all 11 sectors, including all the small companies I invest in, over 54 of them, every single one of them is using an AI app and is spending more on AI applications than they did 18 months ago, because it's a productivity tool, a margin enhancer. So this idea that it's a bubble in the sense that all these companies don't have earnings yet, it's a race to see who's going to deliver the prize. And I bet on all of them. And, I'm talking my book a little bit because I developed data centers as a real estate guy. I have never seen demand like this in CapEx for real estate that's applicable for data centers. We've got demand for 45 gigs in North America, and only 5 are under construction. Every guy and his dog is trying to find 5,000 acres they can put a data center on. And so, yes, it sounds bubblicious, but it's actually a useful tool. So I'm in the camp that says, stay the course, get diversification. And I also think people should start looking at blockchain, because Wall Street's looking at it now to combine blockchain with AI for very interesting applications. And I saw a prototype of that in Singapore last week. You pick up your phone, you're beside a bodega or a coffee store or a well-known burger chain, you say, Big Mac with cheese and a shake. Walk in and pick it up. That's it. No app, nothing. Nothing. It completely translates, and it geolocks where you are. It knows what you want because you just told it, and you walk in the store and you just pick it up.
And the blockchain's the payment?
Blockchain does the payment system. It's surreal. It was incredible, and it's actually prototyping. So I think it's 24 months away.
If my kids got their hands on that phone and it was mine, I would be so broke. Can you imagine how much unapproved shopping would happen? I asked you about the kind of picking the apples, Charles, because like in any kind of wave like this, inevitably you're going to pick one and you're going to realize it wasn't the one. That's just obvious. But I'm kind of agreeing with you in that I don't think that should scare you about being in on this. We just had the Nobel Prize, not only the Nobel Peace Prize this week, but in economics.
Right.
And the three guys who won it basically did work that extended Joseph Schumpeter's theory of creative destruction, which is one of the most beautiful things in the capitalist system, because you take an existing order and you find a better way to do the thing, or a new way to do a new thing, and it subverts the old, but it improves people's lives. And so on AI, I'm of the view that we're in a bubble. We've got some kind of bubble. We've got bubbles everywhere, okay, because we don't know the future. And you're going to put your money in the wrong thing. But that's okay. What the most dangerous thing for a society is to start saying we can never have a bubble. We can never have bad bets. We can never have wrong bets. If somebody gets it wrong, I'm stealing this from you, they're going to get bailed out, Dagan. Because if you do that, you cease to have capitalism. The markets are about success and failure and what you learn from both. And I'm nervous with the bubble talk right now, not that we have or don't have a bubble, but that when the thing starts to get pricked and burst, you're going to have the rush of people coming in and saying, save them, bail that out, have the government take a stake, and that is going to kill capitalism.
Speaking of bubbles and bailouts, we will be covering Argentina in the next hour and the U.S. government bailout of Javier Milei. That's small ball. That's small time. My concern is, and anybody jump in here, it's not artificial intelligence and any kind of overinvestment. Let's call it an overinvestment in AI data centers. That's equity. We get into trouble as an economy, as a nation, even as a world, when it is a credit bubble. And when it is a credit mania and that collapses in on itself, because we're an economy that functions on credit. And if credit tightens up, dries up, our economy can't function. And that's when you get the bailouts from the central bank and the federal government. And what has happened just in the last several months is, and I've mentioned this is in private lending. No one knows really the problems that are out there in private non-bank lending. All this new hot money went into these lending funds that own this debt. And these funds are leveraged. They're like 2x leverage in some cases, that made private loans, not small business loans, and they were supposed to be, they adjust, the rates on them adjust, and you get paid back. Their recovery rates are like 80 or 90% if a business goes bust. And so far with these blow-ups that were sudden and smelled of fraud, Tricolor and First Brands, and there were more problems, that's not the case. And I'm just saying that if there are more of these, and it's more than just a couple of kind of ill-timed fraud-ish bankruptcies, this will be a cascading problem. Yeah. And the government doesn't know how to fix it and really doesn't have any way of fixing it. And it's not just these two blow-ups. There were other problems emerging in credit markets. Saks Fifth Avenue was one, and also New Fortress Energy crashed as well.
I agree with you on that. I just want to pivot for 1 second and say all of this is also happening in the backdrop of this trade war with China, upcoming deadlines, and
Right.
President Xi and President Trump going back and forth. Jameson Greer, trade rep, making some comments last hour talking about where we stand with those 100% tariffs, saying that it depends on Beijing's next move, which is why the markets got a little bit of a boost today. But Brian, yesterday we were talking about everybody putting their cards on the table and trying to be as tough as possible. AI is a big piece of that. Don't think that Xi Jinping isn't sitting back and seeing what we're doing here in the United States and this president's push on AI and building out the data centers and letting capitalism flourish the way you were describing to get the edge and get the advantage there. And that's another reason that I think that Xi is trying to act so bold. He's really worried about that.
The capitalist engine can roar big time if you let it. I think he wants to make sure that he can suffocate it somehow. But I think President Trump cares enough about this that he's not going to let that stand in the way.
Yeah.
Even if it means on our own side, rare earths in America and doubling down and investing.
Well, we got a double, quadruple. Yesterday I did the whole walkthrough on how we gave that away.
Yeah.
We were the dominant force, and Mountain Pass, California dominated the entire industry around the whole world. But the water went into the Ivanpah, dry lake. And there was some radioactivity and a few leaks, and they said, let's get rid of that. By the way, they replaced it with the Ivanpah solar panel thing that went bust last month. 2.2 billion, 1.6 billion taxpayer money instead of, finding a way to maximize it.
But you still can't get a permit. I mean, I know we're trying to.
I know, but I think those things are going to be, listen, I think if you listen, for instance, to Scott Bessent yesterday saying, comparing this to the COVID thing, warp speed, bringing up those things. This is, I think we have to look at this, to your point, from permitting to everything else as on a war footing. On a war footing.
The policy's there, but it hasn't gone down to the state permitting level. I'm an investor. I would invest in 2 seconds if I could in that. It's just a myriad of permitting that's going to take years. Unless the executive says enough, slices through the BS at the state level, you can't build squat in terms of drilling into the ground and pulling rare earth out. You just can't. Look, I'm just a realist. That ain't going to happen anytime soon until. Imagine going to Gavin Newsom and asking for a mine that has tailings that's going to take out radioactive elements out of the earth. The chance of that happening, 0. So until that gets fixed, we're still screwed.
Well, there's some ways the federal government may have to leverage.
Well, I hope they do.
Power, the eminent domain, whatever they have to do, because this is a war. This is a war.
China's kicking our butts.
Right. Well, we gave it to them. We gave it up because of the Gavin Newsoms of the world, and now it's time to take it back and get back in the fight. There's no other way. This also means we got to go after Greenland even harder. Maybe not take them over, but we need some deals there because they've got a lot of this stuff. Ukraine has a lot of this stuff.
Canada has it.
Canada has it.
Latin America, which we're going to talk about in a second, has it.
Yeah.
And also coming up will be my thoughts on J.P. Morgan. J.P. Morgan had a whoopsie with a Tricolor, the subprime auto lender, had a $170 million charge-off, a mea culpa from Jamie Dimon. But he actually used a phrase I used the other day. When you see one cockroach, there's probably more. Their stock is down today, and I think they had their worst quarter. Bank said its credit losses were $3.4 billion. That's the highest since the first half of 2020. Well done, Jamie.
Yeah. You've seen that well said by the panel there. The overall sentiment is essentially this is the time to build your future. I mean, there's honestly no better time than now to start. If you're in debt, definitely pay that down. Like Deegan was saying, if the economy goes into another debt bubble, is not looking good. So if you're out of debt, that shouldn't impact you as much. So the first priority is definitely, like Dave Ramsey says, baby step 2, get out of debt. Like pay off all your car loans, your house, even if you can, things of that nature. And just, the next step from there is to invest pretty heavily. I mean, Kevin O'Leary was saying it, AI is definitely not a bubble right now, from the looks of it. There's a lot of construction going on with the data center and everything like that. Data centers being built. The reason why people think it's a bubble is because they don't know where it's going to go from here. But honestly, like at the rate it's going, it definitely looks like it's not going away. So time will tell. But I say all that to say is like if you are debt free, find a financial advisor and take advantage of this market right now. Find good AI mutual funds, ETFs that you can invest in. And, if you're not really all that fancy into it and you don't really want to go out of your way and hire you know, uh, a finance expert, then what you should at the very least do is invest in your 401k. If you're debt free, you should be investing, maxing out as much as possible. And yeah, just make sure you're investing in the right things. S&P 500 has shown to be a very good investment as far as mutual fund goes. But yeah, like I said, the right mentor, the right financial advisor, the one that's not just there to, collect your money, but the one that's actually there with the heart of a teacher, like the ones that Dave Ramsey can provide you on his website. Those are the ones you want in your corner because right now, honestly, it's looking like it's only going up from here. Like, yeah, things might be a little bit down right now, uncertainty with tariffs and, like they joked about the market and like supermarkets and stuff like that with food prices going up in some cases. Uh, Try not to pay too much attention to that. I know it might hurt the pockets in the meantime, in the current time, but don't let it discourage you. Like if you're debt free right now to invest in the market, very, I should say, in a smart way. Definitely don't do single stocks on your own without research and things of that nature. But the right finance person in your corner, or at the very least your 401k, I'm sure you guys will be able to retire hopefully wealthy. But yeah, with that being said, I do want to get to our next topic here, which kind of ties in or segues into it, how much your house payment should be. So yeah, there's a Dave Ramsey episode I want to show you guys that kind of talks about it. We'll go ahead and react, but essentially this is top of mind. You don't want your house payment to be too big, otherwise you'll be known as what's called house poor. So yeah, let's go ahead and dive right in.
So I am the mother of 8 children. We just had our 8th back in April, and I homeschool them. I stay home with them. And my husband is a physician assistant. And a couple of years ago, we bought our first home at the top of the market, top of interest rate. We were kind of lured into it by the 2-1 buy down idea. And our mortgage hit its full scope in July, and I feel like I'm going crazy. So I'm wondering if you would advise us to actually sell our home.
How much is your house payment?
$3,900.
And what's your husband's take-home pay?
He makes $120,000, and that's he works full time at one clinic, and he picks up a couple extra shifts at another clinic, and he's also donating plasma every week so we can pay for groceries.
Yeah, because your house payment's 50% of your take-home pay.
I know.
And it was before the 2-1 started, even. I mean, it already was in the stupid zone as soon as you moved in. The 2-1 didn't even buffer that.
We were living with my parents, and I was expecting my 7th child, and my husband was commuting an hour every day.
Yeah, but I mean, you went from homeless in your mother's basement to $4,000 a month.
I know.
This is not like a small step. This was a great leap.
I know.
Yes, you got to sell your house, kid. You bought a house you can't afford.
Unless his income is about to double, which I don't think that's in the cards.
I know, it's not. The thing, too, is that he loves his job so much, and where we live is actually very, very expensive. So even renting like a 3-bedroom house would cost us around $3,000 a month where we live.
Well, you can't afford to live there then.
I've been telling him this for a long time. Back in May when I had my 4-week-old baby, I said, let's just sell our house and live in a trailer. I'm willing to do anything, but it's hard for me to get him on board with making
I'm not saying live in a trailer, but you go to extremes. You go to extremes.
I do.
$3,000 a month rent to a trailer in one sentence.
I know.
Why don't you just go do something reasonable like $2,000 a month and live out far enough away that you can find that and let him go to work?
Okay.
Yeah, and let's get rid of this problem. But yeah, don't, and And then let's start talking. Maybe you can find something you could buy that fits in that. I don't care if you own or not. But the house payment needs to be more like a fourth of your take-home pay, not half of your take-home pay, especially when you have 8 little birds to feed.
I can't imagine 8 kids in a trailer. That's
No, we're not doing a trailer. And we're not going back to mamas either. None of that's necessary. But I mean, we're a fur piece from there at $4,000 a month. Okay, this is a big, serious, nice house here. So there's a lot of different things.
Yeah, so essentially you saw that, right? 50% of your take-home pay is definitely not where you want to be. Dave Ramsey always says around 25% is good. If you're in that 30% range, that's also fine as well. But you definitely don't want to be 50%. Even above 40% is like considered too high. Even though you can get approved for that much apparently, but you want to minimize your risk as much as possible, and your debt. That way you can just build wealth in the future. So if your house payment is taking up most of your money, you don't have any money left over to like do things like invest, save 36 months of expenses. Your whole world comes crashing down pretty much. So don't want you guys to be in that situation. So that's a good rule of thumb. Try to stay way below 40% of your take-home pay. Be in that sweet spot of 25%. I know with the current rates and how house prices are, that's kind of hard to do, but it's not impossible if you're willing to move far out enough temporarily, or if you are willing to see what the market does in terms of the interest rates and things of that nature. There are options there. So yeah, I'll leave you guys with that to ponder on. But finally, that will bring us to our last and final discussion, and that is the stock market and how it actually went down this past weekend. So without further ado, let's take a look here.
We'll see what happens with China. I've always had a great relationship with them, as you know, but they're always looking for an edge. They ripped off our country for years. They made with Bush, with everybody. They made Obama was terrible. And I really liked Ronald Reagan. I loved him as a president, but he was not good on trade. He really wasn't good on trade. On trade, he wasn't good. But he was good in many ways. But I will tell you that China in particular, boy, they did a number on our country. They took money out. Now it's reversed. I mean, we're doing very well with China. I don't know what's going to happen. I can't tell you. We're going to meet in a couple of weeks. We're going to meet in South Korea, actually, with President Xi and other people too. But we're going to meet. We have a separate meeting set up.
If you put that 100% tariff on top of what's in place already, you're at 157% tariff on China. Can that stand?
No.
What is that going to do to the economy?
It's not sustainable, but that's what the number is. It's probably not, it could stand, but they forced me to do that. I think we're going to do fine with China. I get along great with him. He's a very strong leader, a very amazing man. And you look at what he's done and what he's, where his life is an amazing story. It's a story for a great movie. I think we're going to be fine with China, but we have to have a fair deal. It's got to be fair. And you cover it as well as anybody that's ever covered this subject. It's a very complex subject, but China has ripped us off from day one. And, Richard Nixon, he allowed this to happen. He was the one, he opened China, and I said, is that good or bad? You tell me. He unleashed it. And we have a very strong adversary, and they only respect strength. They really do. They only respect.
Well, there you have it. So China was making some trade threats to America, and it caused a lot of investors to panic sell, and essentially make the stock market go down. Now, why is this important? Because these type of things happen, right? The market is very unpredictable, and the only person that gets hurt on a roller coaster is the one that jumps off of it. The one that usually rides it all the way through to the end comes out on the other end pretty safe. So if the stock market is going to be like a roller coaster going up and down, you're going to want to buy and hold. Like, you don't want to short sell, or not. That's not the proper term, but you don't want to just keep it short term and sell it, essentially, right? And that's what a lot of people do in these type of down markets. They panic sell, and it's not good for their overall portfolio. I would say at the very least, you should be holding your mutual funds for about 5 years. 3 to 5 years is a good range. That way you can start to maximize and see the growth. If there was a downturn, within those 5 years, it'll all average out hopefully by the end. That's why they say on average, the stock market or S&P 500, for example, does about 10 to 15% a year. Where did they get that number from? You might call that financial advisor a liar, because your mutual fund just did 30% last year, and you're looking at that and you're like, wow, I'm outperforming the market. Again, over time, when things go up and down, the average that gets taken from there, obviously is going to go down and things like that. As long as you net positive, whether it's 10 or 15%, that's still a gain that you can take home with you. So yeah, that's just some advice I want to give that I've seen in the past, and Dave Ramsey talks about it a lot. That's definitely the way to go. But yeah, I hope you guys enjoyed this little short episode. I want to go ahead and give you some of my ideas here and react to some of the news that came out. Hopefully you guys found it informative, and I look forward to seeing you guys in the next one. Peace.
So do you have a minute to connect? Let's Minect. That's right, guys. I'm officially on Minect now. You guys can go ahead and book me. I will be offering financial as well as career coaching based off of the Dave Ramsey principles, of course. So yeah, feel free to contact me, connect with me on Minect, and I look forward to speaking with each and every single one of you.